Even though I hope you're doing well, we've got the PCE data tomorrow, which might explain why things have been a little bit roller coaster, and some things haven't actually made sense in so much as that we had a lower VIX, lower indices, lower dollar, and a lower 10-year Treasury yield. So they can't all be lower. It doesn't make sense. It just tells us that the correlations really broke down today. So really what should happen is that the indices are high and the dollar is negative, or or the VIX is negative. They can't all be negative. So it tells us that obviously there's a little bit of speculation, perhaps a little bit of apprehension about this data tomorrow, and it's probably really eyes on the ECB and NFP next week. We've also got a ton of ISM data, PMI data next week as well. We've got some retail sales in Germany, but I think it's really eyes on the PCE. So if you encountered some difficulties today, it's likely it's due to the apprehension and uncertainty going into next week, and maybe this PCE data. And perhaps I could show you the EURUSD, because we can talk about the robot. And it is frustrating because it's doing this these big wild swings while contained within a range. So we're not breaking any ranges, but we're just doing this wild swings, and it's making profit, then it's losing some profit, then it's making profit, and then we're losing. So it's basically one step forward, one step back, one step forward, one step back. So what we need to do next week with the robot, we need to reduce the take profit and potentially look to increase the sizes, and then we can look at just getting out a little bit quicker. So I'll show you what I mean. If we come to the QDB testing, and it is a little bit frustrating, but I'm not going to let myself get annoyed by it. But this is how we were at 6 a.m. It triggered the trade, fair enough. Awesome, would have been a good one. But our TP was just a bit too far away. And it did this. So what we need to do, definitely what I'll do next week, is that we'll just simply truncate, reduce the TP. So if we had like a 15 pip take profit, we would have got out, and it had to come all the way to its 200 MA. And then it's now hitting resistance at the 200 MA. So it could be like a return to the mean average, and it could just be one of those things where we're just going to sort of just yo-yo, using the MA as like a magnet potentially. We see we sort of hugged it here, didn't we? Reaction there, another reaction, potentially down to the SLC, back up to the 200 MA. So we have to be careful, but I think we are on the right track with the robot. I'm not like dissatisfied by it. I'm not unhappy. It's just that we just need to simply get out a little bit quicker, especially if it's doing this kind of stuff. It's just pretty horrendous. I mean, like we had a channel break here, and it looked quite bullish, and we went all the way back down. But you could argue we're back in that channel, potentially. It's difficult to say, isn't it? But you can see what I mean. This would have been like a bullish development. Up we go. Oh no, we just wanted to get the SLC, which is 108.90. Down we came very heavily. So I think that's what we'll do with the robot. So it's not really nothing to be grumpy about or anything like that. It's just that we've got to get out a little bit quicker, because it's really just targeted stop loss clusters. That's all it cares about, and it could explain why the erratic price action has materialized. It's just because it just wants retail stops, and you could argue stop loss cluster here, and then probably one there, for example. We look at historical ones, no doubt they're at these swing highs, and then we're just seeing reactions off the liquidity. So we'll just get out a little bit quicker. So we could have had a nice little bit of profit there, but it's fine. Okay. And so that's the robot update. You would still need some patience with it if you're testing. Don't go live yet, I think, because we still want to fine tune this take profit a bit. I mean, we should be there. We should have released a profitable bot by now, but I don't know how we can really, when stuff's doing this, like we're actually quite bullish, aren't we? That 200 MA, and now we're below the 200 MA. So have we sort of technically flipped? You could probably argue perhaps we have. We used it all the way up, and now it hit the resistance, didn't it, today? So it's this could be just a retracement up to the average. So we'll just wait and see. But I'm not too fussed about the technicals, just really the risk management part. Because it can do whatever it wants. We just need to exit at the best times, like optimal times. So that's what I'll do on the weekend. So when we go, when the market opens on Sunday, it'll be with those new take profit and SL parameters. Okay, so the sheet is, well, like I said at the top of this video, there's a lot of uncertainty. So it's probably not really worth looking at the sheet so much because things have been really out of bonk today. Okay, so we've got a strong Swiss franc, a weak USD. Okay, and yen is doing yen things. Gold and Aussie are in a strong buy section with the Swiss franc, but the bubbles are kind of like in a weird position. I'll show you what I mean when I say things are out of bonk. US Treasuries. Right, okay, so Dow Jones, the S&P, the Nasdaq. Right, okay, so the Russell 2000 is positive. Okay, that's okay-ish. VIX is negative. The 10-year Treasury yield is negative. The European indices were positive, but this isn't futures. This is like normal market data. Google down, Apple up, Tesla up, dollar down. So we shouldn't have negative indices with a negative VIX, a negative dollar, and a negative 10-year Treasury. So one of them is lying, or at least probably two of them are lying. So it's probably a little bit of uncertainty going to the PCE data, and don't forget end of month as well. So we can probably go through the indices, and we'll just wrap up. And it's been quite frustrating today, especially if you're trading cross dollar. We had that big reversal, and so this is yesterday's. I was saying potentially down to the lower trend line, and we would get the buy set up. We came down to the lower line, and then we got the buy set up. Okay, so that went to plan. I was just a little bit early on the buy. I thought maybe we'd get the crossover at the circle, but we didn't. They'd end up selling it 2, 3, 4, 5, 6 hours after the technical bounce. So I was 6 hours out, but it's okay. US 30. And yes, it's going to be a little bit boring, to be fair. But, we have fallen quite a bit, to be honest. But I think we're going to be making a buy. And so it's going to be a little bit boring. Okay, so great if you're looking for longs. But if we sort of want things to, go back to normal, we should be coming off these highs. And we have, but we could probably do more of a dip, potentially. But every time you see they'd gone long, they went sideways. But, they did actually, they sold. So we should have been above. And then it got rejected. And at that point, they went long. We really fell. So this was a slightly naughty box, that one there. US 500. And yeah, we should be above the arrow. Okay, so what happened is that they'd sold, but we're very, very spiky. So again, it's probably that uncertainty and, just general apprehension. What's tomorrow going to, give us in terms of data? If that PCE data comes in hot, that's going to be quite risk off, isn't it, really, to be honest? And gold. And, we should be above the arrow because they'd sold. But like anything, we're just chopping really hard. So I guess really in the summary is that, we've got a lot of uncertainty. We saw a big U-turn on, cross dollar. Did we come back to the mean? Did we come back to the average? We probably could have done, and this could have been a retracement. And we could be theoretically starting its new downward trajectory. Look at the 200 MA on the way up and price. And then, you know, we came up to hit the price, the MA. So we could, theoretically, be doing this. And we could have perhaps got stopped out unnecessarily. But, you know, how big is that stop loss? 60 pips. So we can't do that. We can't have a profitable bot with a 60 pip SL because we need a 60 pip TP. Or at least minimum. And which way is it going to go? Down here, potentially, but then we've got a stop loss cluster in the way. 36 pips, right? So if we entered now, we wouldn't get a good risk to reward. So we have a massively wide stop, and our TP is based on the SLC. We're not going to have a good risk to reward. So we'll keep it as it is, but we'll just reduce our take profit, I think, and we'll just be out a little bit quicker. And because of that, I think we need to increase the sizes because if 15 pip stop loss is not going to break the bank at all. So I think we actually need to increase the sizes. Otherwise, we're not going to make profit long term. And it's all about making profit and trying to avoid this absolutely horrible reversal, this U-turn. I got a sneaky suspicion it's come up to the 200 MA. We're going to come and get the SLC. But unfortunately, the bubbles haven't really told us much in terms of the EURUSD, because look at the bubble proximity there. So it doesn't really give us many clues at all. In fact, if anything, the dollar Swiss would be a better trade, where you'd be looking to sell dollar and buy the Swiss franc. So that's today's video. That's going to wrap up the weekly videos, and I'll be back on Sunday for the Sunday bulletin and also the COT data as well. And actually, maybe because of the Memorial Day, I think the COT data will be delayed. So we may not have it on Sunday, I think, and it may be delayed till Monday night. So we'll just see how we go, and I'll speak to you guys soon.